Ladies and gentlemen, Tesla stock is up about 2% today, and we have massive news. This is much bigger news than I think is even being reflective in Tesla stock today. It has to do with Elon Musk's compensation package, but not even as much as the compensation package that was announced today. It is what's going to take place on November 6th. So we're going to get into all of your Tesla stock breaking news today, what's happening in the broader markets, because not just Tesla, the Russell is up 1.63%, S&P up 1.3%. I want to give you a little bit of a backstory of what's happening today. Ladies and gentlemen, before we get into anything, hit that like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video for the trading community. We got some stocks that are about to explode, in my opinion. Again, I'm not a financial advisor. I'm not a jackass. Come join it. Don't be a jackass. I'm not a jackass. Don't be a jackass. None of this is financial advice. If you buy or sell anything, you can lose money. Contact a financial advisor if you have any questions. Link down below in the description of this video. But with that, let's get into today's episode and the breaking news for Tesla stock investors. So the official Tesla X account posted this long post, okay? I'm going to save you a little bit of time here. We're not going to read the first part, okay? It basically goes over a little bit of the history of the 2018 compensation package, okay? And some of the legal disputes that are currently in play. Yes, there's still legal challenges in the Delaware Chancery Court. Okay, we know that, and you know that package is eventually, in my view, going to be approved. Okay, but it's just gonna take some time. But let's start here. It says retaining Elon is more important than ever before. Today, Tesla is at a critical inflection point that has the potential to create continued extraordinary value for you, the shareholders. Through Elon's unique vision and leadership, Tesla is transitioning from its role as a leader in the electric vehicle and renewable energy industries to grow towards becoming a leader in AI, robotics, and related services. I mean, that gives me chills. That sounds really good. It says, to succeed, it requires a leader who combines strategic foresight, adaptability, and relentless execution to outperform competition and inspire the team. Elon has demonstrated these unmatched leadership abilities time and time again with his unparalleled track record of delivering shareholder value since he joined as a founding figure and spearheaded the transformation of our extraordinary company. And while these impending changes are exciting, the outcomes are not guaranteed. It is imperative to retain and motivate our extraordinary talent, beginning with Elon. The war for AI talent is intensifying. Side note here, this is not what they say, but Meta, for an example, is basically poaching everyone. Like, it is a talent poaching season right now. Okay, so there's a lot of precedence to this. Again, it says the war for AI talent is intensifying, with recent months including multi-billion-dollar acquisitions of companies and nine-figure cash compensation packages for non-founder individual AI engineers. Again, referencing some of the buyouts that Meta has been doing. And really, all companies are doing this, but Meta gets a lot of attention. They're poaching on OpenAI. It says, even among this group of highly talented individuals, no one matches Elon's remarkable combination of leadership experience, technical expertise, and arguably, most importantly, decades-long proven track records of building the most revolutionary and profitable businesses across different industries. While we recognize that Elon's business ventures, interest, and other potential demands on his time and attention are extensive and wide-ranging, including his leadership roles at XAI, SpaceX, Neuralink, X Corp, and The Boring Company, as well as his other interests, we are confident that this award will incentivize Elon to remain at Tesla and focus his unmatched leadership abilities on further creating shareholder value for Tesla shareholders and attracting and retaining talent at Tesla. To be clear, losing Elon would not only mean the loss of his talents, but also the loss of a leader who is a magnet for hiring and retaining talent at Tesla. I mean, that's about as spot on as anyone could write it. Okay, there is a poaching war for AI talent right now. and we need Elon at Tesla. Okay. Very, very important. But it also highlights that we need to incentivize Elon to, continue to put in the grind at Tesla, to really prioritize Tesla as the only, public company out of the others that's going to get the spotlight put on it. Okay. It says here, the special committee believes now is the right time to take decisive action to recognize the extraordinary value that Elon created for Tesla shareholders. As such, the board, with Elon and Kimball Musk recusing themselves, has unanimously approved a recommendation from the special committee of the board to grant Elon an award of restricted stock equal to approximately 1/3 of the compensation he earned under the 2018 CEO Performance Award. The award provides the following provisions: 96 million in restricted shares of stock, subject to Elon paying a purchase price upon meeting a 2-year vesting term to be delivered after the receipt of antitrust regulatory approval. The purchase price will be equal to the split adjusted exercise price of the stock options awarded to Elon under the 2018 CEO Performance Award at $23.34 per share. A requirement that Elon serve continuously in a senior leadership role at Tesla during the 2-year vesting term. This is where some people are getting a little bit confused. This is basically keeping Elon at Tesla for the next 2 years. Okay. But there's a big critical detail that we'll get into here in just a moment. It says a pledging allowance to cover tax payments or the purchase price. A mandatory holding period of 5 years from the grant date, except to cover tax payments or purchase price, with any sales for such purposes to be conducted through an orderly disposition in coordination with Tesla. So basically, he has to hold these shares for 5 years. Upon the ending of that 5-year period, he has to coordinate the sales with Tesla. So basically set up like a, SB, I believe it's called SB1 trading plan or selling plan, kind of like Jeff Bezos does, right? Where he sells like 1 million shares a week or 1 million shares a month. It has to be like orderly, okay? He can't just dump 30% of his shares if he woke up and wanted to one day, okay? So that's obviously good, blah, blah, blah. It says a pledging allowance to cover tax payments for the purchase price, which again, he can sell stock if he has to pay taxes. A mandatory holding period of 5 years. Again, read that. If the Delaware courts fully reinstate the 2018 CEO Performance Award, this interim award will be forfeited or returned, or a portion of the 2018 CEO Performance Award will be forfeited. To put it simply, there cannot be any double dip. Elon will not be able to keep this new award in addition to the options he will be granted under the 2018 CEO Performance Award should the courts rule in our favor. Okay, now we're getting into some of the juicy stuff, but that's pretty straightforward. This will be null and void if Elon's 2018 compensation package gets reapproved. Now, we think it's going to get reapproved eventually. The courts kind of take a long time. This is significant because it keeps Elon in the CEO position, technically a senior executive position, but let's face it, Elon's going to be the CEO for the next 2 years at least. Okay, and it does give Elon larger ownership percentages in Tesla. We'll get into that in just a moment. It said, the special committee consisting of the two of us was formed earlier this year to consider how best to retain and incentivize Elon in a manner that aligned with the best interest of the company. The special committee and the board deliberated carefully over the decision to grant this interim award against the backdrop of an ever-intensifying AI talent war and Tesla's position at a critical inflection point. We believe it directly addresses a top concern and priority for shareholders and the board alike, energizing and focusing Elon on Tesla so he can propel Tesla into its next era of growth. While we continue the legal campaign to have the 2018 CEO Performance Award reinstated, this interim award is structured to incrementally increase his voting rights upon grant, which he has repeatedly told us and shareholders have confirmed is an important part of incentivizing him to stay focused on the critical work we are doing here at Tesla. We believe this is a vital consideration, and we use the tools currently available to us, our existing equity incentive plan, to grant this award. We would like to stress that prior to recommending this award, we reviewed your letters, read your ex post, and considered the direct feedback we have received from many of you in order to align our recommendation with the expressed views. From those communications, we know that one of your top concerns is keeping Elon's energies focused on Tesla. This award is a critical first step towards achieving that goal, although it is limited by the capacity of our current equity incentive plan. As such, we are also working on next steps to address that issue. Still, while our work remains ongoing, we feel it is important to communicate directly and transparently with you all, our shareholders and Tesla owners. It says here, this is the big part, okay? This is massive. The special committee continues our work to address a longer-term CEO compensation strategy, which we plan to put to a shareholder vote at the November 6th annual meeting. Boom. There you have it. That is the biggest thing I get out of today. Obviously, you keep Elon at the CEO for another 2 years. You raise his voting rights in Tesla, which, again, is great. I think this whole thing will kind of be null and void when the 2018 compensation package comes about. But between now and court litigation, it ensures that Elon is going to be at Tesla. But that's the big thing, okay? November 6th was a date in which I was speculating we would get to vote on Elon's new compensation package. But nothing had been set in stone yet. Now it is. There's going to be a longer-term CEO compensation strategy that we're going to vote on November 6th. As I've talked about in previous videos, if you've never watched this clip or video on CNBC, on YouTube, it's called The Strangest Secret by Earl Nightingale. Watch it. It changed my life 7-8 years ago, okay? Basically, the premise of it is, if you set a goal and you actively work towards that goal, there is no way that you will not eventually hit that goal. It could be a year, it could be 10 years, it could be 50 years, 100 years, whatever it is, right? Within reason. If you set a goal, you will reach it. Just like if you put a captain at a ship with a destination and GPS, it's always going to get there unless something crazy happens, right? As he says in the clip, 9,999 times out of 10,000, it's going to reach its destination. But if you just start the ship and let it go, it has no goal to get to. It's never going to get to that goal, okay? Quite the opposite odds are likely at that point. So just getting a compensation package, keeping Elon at the CEO position in Tesla, or a senior executive position. He doesn't necessarily have to be the CEO for that matter. For the long term, for the next 10, 20, 30 years, whatever the plans, terms are. And then also setting a $2 trillion, valuation threshold, a $5 trillion, a $7 trillion, a $10 trillion, a 15, 20, or $30 trillion top tier on a long-term compensation package sets a goal. Instantly makes it a little bit more achievable from a, statistical point of view, okay? Just literally saying a goal, like in your real life, if you say, I have a goal to make $10 million, okay? You are more likely to hit that goal eventually rather than you just say, I want to make as much money as possible and leave it at that. If you set goals, you're more likely to reach them. Okay, and like the 2018 compensation package, everyone thought those goals and milestones were crazy. But this time around, maybe it's a little bit more believable or realistic. And keep in mind, Tesla is less than $1 trillion market cap today. So even a $5 trillion valuation on Tesla is, would be wild from, Wall Street's perspective. I know we're kind of like a 5x from here. That's great, but Tesla can do a lot more. Like Wall Street, a 5x is like top tier for Tesla. Wait till they see some of the long-term tiers that Tesla is striving for, and they're going to be like, wow, this company, even remotely, hitting those tiers would be a massive win. And I do think this is critical because it's always one of those fears that we have as investors, not as much maybe us, but Wall Street. With Elon being such a large premium at Tesla, what if he just decided to step away one day, right? Like, what, Tesla stock's going to go down 50%, 70%? Like, you can't quantify that, but there is a large premium placed on having Elon at Tesla. That's why this is so big. And again, the 2% rally in Tesla is like a good sign, but I don't think it's fully reflective of the actual news that we got today. which is exciting. I think there's some value arbitrage to be had here from that perspective. And I do think, after November 6th, into the end of this year, into 2026, if you're bearish on Tesla, I think that's going to be proven to be a very bad view. But hey, it's going to take some time. Now, this stock award of 96 million shares that Tesla is giving to Elon Musk will bring his total ownership of the company to about 14.6%, up from 12.9% currently after taxes, which he wouldn't need to pay for a couple of years. So now his ownership, 14.6%. Elon wants to get to like 25% ownership. So again, you could quantify this with, math's sake, for an example. But you're going to be looking at some very high tiers on this new compensation package. And that's going to be exciting on November 6th. And we'll probably hear more about this new compensation package before November 6th. So we're going to be on the lookout for that over the coming weeks in the next 2 months or so, 3 months or so. Tesla will be opening a new showroom in Delhi, India on August 11th, their second store in India. And you now have the first ever Tesla superchargers that are live in India. Sawyer Merritt says this November's Tesla shareholder meeting is setting up to be the most interesting one ever. Not only will there be a vote for Tesla to invest in XAI, but there will be a vote on a longer-term CEO compensation plan for Elon. And I think that's also really cool. Kind of ties Tesla to XAI and Elon to Tesla as well. Just getting Tesla to invest in XAI, it's like Tesla's work he does at Tesla, Tesla's work he does at XAI specifically, it's going to benefit, both companies. It really ties them together in a relationship that I think is going to be strong and really underappreciated for a very long time to come. In option activity from hedge funds and institutions, not a whole lot of activity today. 34 different trades totaling $11.79 million with a positive order value of 9%. There's just not a lot of dollars trading hands right now in Tesla options. Kind of one of those slow days, if you will. August tends to seasonally be a pretty rough period for markets. I don't know if that's partially what is happening here, but we've seen hedge funds and institutions adding a lot of bullish option activity in the last couple of days and weeks. So we'll see where the numbers are by the end of the day today. Short interest of free float continues to fall as well, being over 3.08% back in early June, now at 2.47%. For $1 trillion company, that is quite a large move in the short position. You went from, again, in early June, around $30 billion sold short in Tesla, down to about $21 billion sold short in Tesla today. You went from about 86 million shares, 86.3 million shares sold short in Tesla, down to 69.24 million shares. Hedge funds and institutions covering on short positions is a great sign that, they're bullish on the company, right? Now, you do have about 503,000 shares today that are being sold short on net, but again, we'll have to see where the final numbers hash out. It looks like borrowed shares at 1.03 million and return shares at 529,000. Now, this, I think, is pretty incredible news as well. It says Apple App Store spending climbs 13% in July, the highest since November of 2024, in a time in which a lot of Wall Street is worried about growth slowing down. To see more discretionary like spending increases is a good thing to see. Goldman sees policy news, ISM data, and Fed speeches key to this week. Goldman Sachs sees policy updates, Thursday's ISM services data, and Fed speeches as major market drivers this week. They say volatility rose last week with S&P 500 1-month implied volatility at 29 and realized at 26. Put to call skew jumped as investors hedged after weak economic data, especially post-jobs report. With most earnings behind us, 72% of the S&P 500 reported, attention shifts to healthcare, energies, utilities, and semis. Also, small caps, okay? Small caps are going to be reporting, small and mid cap companies, over the next couple of weeks. So a lot of the stocks that we invest and we trade in the trading community are yet to actually have reported. So a lot of under the surface moves are going to be happening, but you have gotten those big tech earnings out the way. So less of an S&P headline risk, okay? Because earnings have come in good. You don't really have that, like, you're not going to get a small cap or mid cap that reports and the S&P goes up or down 1%. Like, that kind of volatility from earnings is behind us. So that's actually a positive in my view. Now, Goldman sees opportunities in underwriting financial stocks given high volatility and fewer near-term catalysts. Since July expiry, S&P 500 stocks are down 1.9% on average. A little bit of weird news as well. Russian Foreign Ministry says Russia no longer considers itself bound by the moratorium on the deployment of short and medium range missiles. There was news over this weekend that Trump is sending like 2 nuclear submarines closer to Russia, kind of, not great headlines. And then Russia says this. So there is kind of a weird dynamic happening right now. It's not affecting markets at this point, but like any threat of nuclear war could be an issue for markets at some point. Although I don't know if that will happen or when that would happen. GM sold 19,000 EVs in the US in July, up more than 115% year over year. Again, with Wall Street concerned about the economy, getting good news like this, high, growth rates on, again, kind of discretionary purchases, if you will. Private company hiring bounced back with 104,000 jobs increase in July, the ADP has said. Moody's chief analytics economist Mark Zandi says the housing market is getting so weak that it's poised to become a significant drag on overall economic growth. Now, in the news today as well, Trump threatens higher tariffs on India over Russian oil. President Donald Trump said Monday he will substantially raise tariffs on India for buying and reselling Russian oil at a profit, accusing the country of ignoring the war in Ukraine. He didn't specify the new tariff rate, but previously mentioned a possible 25% tariff on Indian imports and other unspecified penalties. Despite the threats, Indian officials told Reuters they will continue purchasing Russian oil, citing the issue's sensitivity. Germany's finance minister says U.S. Treasury Secretary Bessent and I have been in constant communication and I want to have a good relationship. Germany's finance minister says, I am positive that there is a deal, but there is a lot to clarify with the U.S. Per CNBC, the EU will delay planned U.S. tariffs for 6 months to allow for trade talks. Today, Donald Trump, wow, I was laughing so hard when I seen this pop through on my phone. I'm not going to read the whole thing because it's not it's not a huge deal, but it says Sydney Sweeney, a registered Republican, has the hottest ad out there. It's for American Eagle, and the jeans are flying off the shelves. Go get them, Sydney. On the other side of the ledger, Jaguar did a stupid and seriously woke advertisement that is a total disaster. The CEO just resigned in disgrace, and the company is in absolute turmoil. Who wants to buy a Jaguar after looking at that disgraceful ad? Shouldn't that they have learned a lesson from Bud Light, which went woke and essentially destroyed in a short campaign? The company. The market cap destruction has been unprecedented, with billions of dollars so foolishly lost. Or just look at woke singer Taylor Swift. Ever since I alerted the world as to what she was saying on Truth, that I couldn't stand her hate, she was booed out of the Super Bowl and became no longer hot. The tide has seriously turned. Being woke is for losers. Being Republican is what you want to be. Thank you for your attention to this matter. Trump just went boom, 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 boom. He's firing shots at everyone today. I mean, Bud Light got the smoke. I mean, Sydney Sweeney got praise. Jaguar got the smoke. Taylor Swift got the smoke today. I mean, I think it's just great. I think it's like, how cool. Now, U.S. June durables orders revised to negative 9.4 from negative 9.3, so not much of a change there. Factory orders month over month came in at negative 4.8%. The forecast was negative 4.8%, so in line with expectations. Wells Fargo now says their S&P 500 year-end target is 6,300 to 6,500, up from 5,900 to 6,100. Trump says last week's jobs report was rigged, just like numbers prior to the presidential election were rigged. Trump says he will pick an exceptional replacement for the BLS. Bank of America is expecting $700 billion in AI capex from the so-called hyperscalers through 2025 and 2026, with, quote, upward revisions each quarter. per Bloomberg Intelligence. Like, again, this is what we are doing in the trading community. We are going out there with the main theme of AI, finding the small cap AI stocks that are underlooked and underappreciated. We've already kind of seen the areas, that are going to benefit from this do well, like this AI capex, like semiconductors, for an example. That's an easy win. Even data centers. While I think there's still upside to data center stocks, they've seen a lot of that appreciation. I think some of the software areas, the actual appliers of this AI technology, are the ones that are being underlooked right now. Think Tesla with the robotaxi network, and soon to be Optimus. Highly overlooked. Okay, there's a lot of smaller companies that are really underlooked right now, and that's where we are investing our capital for those potential massive outsized returns. That 10, 20, 30, 40, 50x is not going to be in the stock that you've heard about before. Okay, it's going to be in the up and coming name that Wall Street, eventually figures out. We're finding those stocks before Wall Street does. Link down below in the description of this video if you would like to come check it out. The Swiss government says trade surplus with the US is not a result of unfair practices, and the Swiss government strives to diversify trade relations. Swiss government says they are not considering any countermeasures at this point. Swiss government says they are determined to make more attractive offers to the US, and the Swiss government say they plan to continue talks with the US. White House senior advisor Hassett says we can't have partisan patterns in massive revisions. Hassett says that we're highly optimistic about the economic future, and he says the job numbers were slower than we expected. Hassett says that data shows tariffs are being borne by foreign producers. UBS says stocks may drop in August, and they see this as a buying opportunity. UBS expects U.S. stocks to fall in August as economic data worsens. Weaker jobs numbers last week raised slowdown fears. Strategists say markets will likely decline until the Fed signals rate cuts, which they expect in the coming months. UBS views any pullback as a chance to buy. And Hassett simply says that big revisions in jobs data require transparent explanations, which I agree with that. If you're going to revise jobs from like 140,000 to only positive 14,000, like, you got to be able to explain that, right? There has to be an explanation to that. Logically speaking, like, what's the math? What happened? How can we get better? And that's the idea, is not creating, even worse BLS data, but getting to the bottom of why we're having these revisions in the first place and how we can improve to get more accurate data. Because when economic data is what Wall Street cares about, and it's so inaccurate that you can't even take the first number as even remotely accurate, there's an issue there. How do you invest with that? So again, I think all of this news is partially why the S&P and the Russell are rising today. The lack of bad news over this weekend, the lack of bad news today. Again, Europe pausing any of their planned retaliatory measures on the US for 6 months. All of that's pretty positive. And as I explained in videos over this weekend, I've been under the view that we were going to have a consolidation period, like a 2 to 3% down move, not a correction, but like a 2 to 3% down move, kind of trade sideways for a while, was going to happen. And it seemed like people got a little bit too fearful on Friday with the 1.64% decline on the S&P, with over 2% drop in small caps. Russell was down 2.04%. You got a little too bearish too fast. So recovering some of that was pretty much in the cards for today, and that was my expectation. You have to remember, Trump wants stocks to do well. Right after the jobs report came out and we were down 2% on the Russell, 1.5+% on the SPY, what did Trump do? He said the numbers, they're not real. Whether that's true or not, who cares? But he fired the BLS so we can get better people in there to give us better data. Okay? Markets like that. It's a sign again that Trump likes the markets. Do you really want to fight a president that, gives himself a report card on how the markets are doing for the next 4 years? I don't. If you do, let me know down below in the comment section. As we also talked about over this weekend as well, the RSI had hit a high recently of 76. In fact, you were the most overbought you had been since July of 2024. So almost exactly a year ago. Now, while the RSI can get into the 80s typically when it gets overbought, you only got to 76, 77. I don't see this market as frothy at all until small caps start to like seriously break out. Like if small caps get to a new all-time high, start really extending higher from there, then we can talk about a frothy market. But we are nowhere even close to that, with small caps still down about 10%, even after today's 2% rally from all-time highs. Okay, but what you have done is reset a lot of the sentiment metrics. So now stocks are still near all-time highs. But on Friday, CNN Fear and Greed Index was at 50, so exactly neutral. Today, after a 1.5% move higher in the S&P, you're only back to 57. So if we hit new all-time highs, you're not going to be in extreme greed like we were a month ago, right? You're going to be midpoint of greed, high point of greed, but you've reset some of those expectations. So you have more fear and a larger wall of worry to climb, which is actually a very positive thing, which again, I believe we're going to be heading into a very strong period. Really November, December, I think those expectations for 2026 are really going to start to go up. And you're going to see certain areas of this market like small caps, high beta, interest rate sensitive names do very well. You might get a bit of a drag on big tech because they're already just pricing in a lot of good news. Whereas maybe the Russell is the catch-up trade into the end of this year. You can also see here the percent of stocks trading above their 50-day moving average is back down to 48.5%. We were reporting on this in the 70s, okay? In the 65 to 75 range. You're back to really a low side of a bull market. So you've even reset some of your technical measures as well, which again, just gives me more confidence that we could continue to power higher from here. We do have a lot of earnings this week as well. I'm not going to run through the whole calendar just to save us a little bit of time in this video, but some big names today and after hours: Palantir, Hims and Hers, Mercado Libre. Tuesday pre-market, tomorrow pre-market, Caterpillar, BP, Lemonade. In after hours tomorrow, AMD, Supermicro, Open Door, Snapchat, Lucid, Rivian, and Upstart. Wednesday pre-market, Uber and Shopify, Disney, Novo Nordisk, like McDonald's. There's a lot of huge companies still to report. Wednesday and after hours, AppLovin, IONQ in the trading community. We bought that at $7, by the way. We're very early to that one. Thursday pre-market, Celsius, Eli Lilly, ConocoPhillips, and Vistra Energy, as well as Sony. Thursday and after hours, The Trade Desk, Rocket Lab, SoundHound, again, some AI-centric names here, Block and Pinterest, Twilio as well. And then Friday pre-market, you have Fubo and Tempest AI. So you have a lot of AI names, some semiconductor names, like Uber, I don't know what category, transportation, I guess you'd put that in there. Some high-flying names here today in after hours with Palantir and Hims. So while it's not going to move the headline S&P, you will see a lot of movement in single stock earnings and related industries. So the volatility is going to be here under the surface for the next couple of weeks, heading into NVIDIA earnings, which is really largely going to cap off the earnings season. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.